the Bank.
Hey guys, welcome back to another week of Money in the Bank. So we've been going through several weeks here of talking about different parts of your budget, such as savings, housing costs, and transportation costs. So today we're going to do one that is very relevant today, I think, for many, many people, and that's talking more about health insurance costs. So do you guys have any idea how much your health insurance costs every month?
I could pull up my pay stub and look, but otherwise, no.
No. Okay. What about
Yeah,
you?
mine, this is definitely my weakest area, I think, because I don't really pay attention to this since I signed up for it. When I started with my company, I said, check these boxes for what I want coverage for, and then, hopefully it covers me. And I mean, honestly, I didn't even look that closely at it because that's the plan that I was given, basically.
Yeah, and I think a lot of people fall into that category. So when I started my first job, my health insurance plan actually was not very good. I was on a high deductible plan. My deductible was $3,000 a month, or $3,000 annually, and I was paying a premium, which is the amount that they take out of your paycheck every month, of about $80 a paycheck, so $160 a month for a high deductible plan, and it was supposedly being covered by my insurer. But the reality is, for a lot of people, if you're not on an employee-sponsored plan, you might be paying $1,000 a month just in premiums for a high deductible plan because health insurance is so expensive right now. So this is definitely an area that can cost a lot of money for people. And so it's, important to just have a discussion. And I think we've made it pretty clear that none of us are true experts on this. We're not experts in this field, but we can maybe shed some light on different things. So another question for you guys. Have you ever heard of an HSA?
Yeah, I definitely have an HSA through my company because we switched to a high deductible plan, which wasn't, the process that I originally signed up for. It was something new to the company about 2 years ago or 2.5 years ago when we did our annual change, and it was a big deal. So we did a high deductible plan, and it came with the HSA, which is the health savings account. And so I, using that, I could put in money into this fund that is tax free, straight out of my paycheck, straight out of my income, straight into this account without Uncle Sam taking its, due diligence out of it. And then I can use that for any medical related expenses, dental, there's a wide range of categories of what I can spend that money on. So it's just a special fund that I definitely take advantage of because it's, anytime you can get an extra basically 30% on your money with no tax penalties involved, that's a great thing to do.
Now, is an HSA something you set up with your bank, your employer, or some other third party?
So typically it's through your employer. You'll get directed to a bank. So you have to have a high deductible plan to be eligible to have a health savings account. So for me, I'm on a high deductible plan, and they directed me to United Bank, which isn't the bank that I usually go through for, my savings and checkings, but they pay the annual fee for the savings account there. So you kind of want to go with wherever your employer has it set up because since they have the group plan, you won't have to pay a fee for that account. And then it'll be taken directly out of your paycheck. So it's kind of both. You'll go through your employer, but you also have a third-party software similar to a 401k where it's through your employer, but there's a third-party software where you own that money. And so, you mentioned the tax savings on the health savings account, but I want to mention that it's not just tax-free going in. It also accumulates tax-free, and usually the interest rates are higher than a regular savings account. So right now you're kind of lucky if you get 1% on a savings account, but my health savings account is actually 2.5%. So it's considerably higher. And also when you pay the money out, it is tax-free. So when I go to the dentist and, have a $100 office visit, I can just pay for it out of my health savings account, and there's no extra, tax deductions taken at that time. So another key difference is, have you guys heard of an FSA account?
Yeah, so we had that as well as an option, but I think that one for me was worse because I think that one, flexible spending account, right? Mm-hmm. That one expires at the end of the year. So basically you can put the money into the account, right? And it goes away if you don't use it. It's use it or lose it, basically. But I don't know if the company matches or anything around it other than...
Yeah, so usually companies do not match. It's more just a tax-free savings where if you know you're going to have certain expenses throughout the year and you don't have a high deductible plan, you can open a flexible spending account at any bank and then put money in there and pay your expenses out of it and still get the tax benefits. But the downside is if you put $1,000 in thinking that you're going to spend it all and then you don't, it just disappears. So kind of riskier. I only recommend doing that if you really know what your fixed expenses are.
Right, but that's something you can use for if you want, I'm guessing, rent, mortgage, car payments. Or
No,
is that
just
only
for
for
just for
healthcare?
health-related
So
purposes.
even though it's flexible, it's just it. So what would be the benefit over an FSA over an HSA?
Yeah, the only reason I considered ever using an FSA is if you know you're going to have a baby in that year, that's a great thing to use because you know you're going to use it by the end of the year, and you take advantage of the benefits.
So the benefit over the HSA is you can only have an HSA if you're on a high deductible plan. So if you have, an 80-20 or a 90-10 plan, you can't get an HSA, but you could still get an FSA.
I see.
And another benefit is there are limits on an HSA. So if you're single, I believe it's $3,300 a year that you could contribute. So if you're like, well, I know I'm going to have more expenses this year, then you could put the additional into the FSA.
Okay.
Do you happen to know, Adam, if you have a high deductible plan?
I have a low deductible plan.
You have a low deductible plan. So you're not quite eligible for an HSA, but do you know if your employer offers a high deductible plan?
They do.
Have you ever considered switching?
No, I did the wait on looking at both of them. I decided for myself, I kind of feel like I wanted to play the safe bet where if anything did happen, I didn't want to be paying huge amounts out of pocket because the way I look at it is things in healthcare are usually not something you can always plan. You can't plan for a car accident. You can't plan for diagnosis of certain diseases. So for me, it seemed the safer bet to do a low deductible plan, pay a little bit more every month.
Yep. And absolutely, I think that makes sense for a lot of people. So, of course, I crunched the numbers. And when I started working, my first year working when I was still in Chicago, I actually did a high deductible plan because I crunched numbers and I saw that in the long run, especially when you're younger in your 20s, being able to build up that health savings account, then you have that deductible when you need it someday. So it made sense. And then I did it. And then that year, of course, I had, the craziest thing of like a mass growing. And it turned out to not be cancerous, but they did need to remove it because it was rapidly growing cells, which just isn't quite normal. So, that surgery set me back my $3,500 deductible, which was really, really hard to stomach my 1 year out of college like that. And so then the year after that, I switched and I was like, I'm going to do a low deductible plan because that was awful. And then, the year after that, I was like, how often can that actually happen to me? So I took the ground of I would pay the same premium as the low deductible plan, but I would switch to the high one. So I would save the difference. So for me, that meant my high deductible plan at my new company cost me $0 a month. And so my low deductible plan was costing me $50 a month. So I just started putting $50 a month into an HSA. And, outside of that freak kind of incident, I really don't have very high medical costs. I'm not asthmatic. I'm not allergic to a lot of things. So I don't have a lot of medication I'm on. So, if you are on medication and you're seeing doctors more often, it is important to kind of factor those costs in. But for me, I'm not. And so my visits, I would go in once a year for, physical, and that was already covered. Even on a high deductible plan, I don't have to pay for that visit. So with that in mind, I kind of crunched all the numbers and I saw, oh, look, I'm going to be saving, $300 a year. And so by putting that directly into the HSA, now I'm at the point where I have enough to cover my high deductible sitting in that account. So I no longer feel like, if I get in a car accident tomorrow, I can meet my deductible amount. But it is kind of a scary thing, I think, especially for younger people. And so I kind of say, get your emergency fund built up because then you can cover these expenses and you can switch to this plan and start taking advantage of the health savings account going forward.
Right, because basically the health savings account is your emergency fund specifically for that segment of your life, specifically for healthcare, right? And to cover those high deductible or any deductible costs.
Exactly.
Yep.
And so now I feel like it actually gives me a little bit more freedom. So, my dentist, for example, is not in network, but it doesn't matter because I'm on a high deductible plan. So I'm going to pay for that service anyways. So I actually go to a cheaper dentist overall because I'm going to be paying for it myself. So it doesn't matter if it's in network or not. I actually am kind of forced to shop around a little bit more and find, the practicers that I actually want to be at and ask their costs. So I think by giving that back to the consumer, you kind of let the free market come back in a little bit. And, I care about prices where when I was on a low deductible plan, I'd be like, well, I can go wherever I want to go. It doesn't matter as long as it's in network. So whenever you kind of give the power back and people have to think about their choices, I do think it'll ultimately help drive costs down for people because I question things a little bit more now. When I go in and they're like, Well, I know for you, Brett, you went in and your cholesterol was a little high and they immediately wanted to put you on medication instead of letting you, eat a little healthier diet.
Right, like I couldn't even finish getting the words out of my mouth before the guy was like already writing down prescriptions and like permanent. He's like, yeah, you're gonna be on this like anti, cholesterol medication for the rest of your life now. And I was only like 26 at the time or 27. I'm like, you're not offering me like no other alternative, and I'm like 0.01% higher than like the average, like just outside of the range. Like that's the solution here. Like I feel like that's not true. And you're taking this off of one reading, so you're permanently prescribing me this forever based on what you're not even comparing it to my history, like nothing. So like I understand medical opinion and medical background, and they're reacting to a particular scenario that's coming up, but like there's some other variables there that like he should definitely be looking at that wasn't even a consideration. Didn't even think about it more than for a second. So.
Well, and that story has a happy ending, right? Because you altered your diet,
I just
lowered it naturally, don't have to pay for the medication.
Right. I just like walked out of there and I was like, I don't think so. Yeah, I'm not doing that. I'm just gonna like change my behavior a little bit, do a little trial and error, give it 6 months, and fixed it. Right. Like, where was that opinion, guy? Like, thank you. I mean, not everybody can just like do that, right? Like, that's not. I mean, it depends on the particular situation.
This is not medical advice.
I have no medical opinion. It's not like it was cancer where it's like, oh yeah, I have cancer, and then I just walked it off.
I'm gonna walk it out. I'm gonna change my lifestyle. Don't trust
these guys. That's obviously more serious medical issues. But yeah, in that particular situation, my second opinion was I'm gonna just give it a try for like 6 months, and
Right, and it was so close to the normal range where you didn't feel like it was life-threatening or anything like that.
It certainly was.
Give it that opportunity.
Yeah, no.
And I know personally, I've encountered doctors where when I talk to them and then I mention I'm on a high deductible, they're like, oh, well, instead of doing this that we were talking about, there is a cheaper alternative. So why don't we go that route first and see if it helps? And so, again, it kind of just goes back to when you kind of take control of your own financial advice. And then if I do want anything done, for example, I wanted some additional vitamin testing done because I have celiac disease and I can be deficient in a lot of vitamins. And it's not covered by insurance, but since I know I have this HSA, I don't mind spending the money to give myself valuable information. So HSAs, I think they get a really bad rap, or high deductible plans, I should say, get a really bad rap. But in the right situation, I actually think they can be really empowering. So I urge people out there to just kind of jot down what you're actually spending on medical visits every year and kind of get an idea of it so that you can truly make that comparison to see if high deductible plan could be the right fit for you.
Right, because statistically, it is the right choice for most young people starting out in their career. It is unlikely, somebody's going to get in a car accident tomorrow, or somebody's going to have, like a mass growing, inside them, or some random weird medical thing that'll pop up. But statistically, you're not going to be that person, right? It's unlikely that will happen to you in that time range. So it is the right choice to go with the high deductible plan for.
And again, like we were talking about at the beginning, if you're a relatively healthy individual, you're not making a lot of doctor visits repeatedly.
Exactly. And I also encourage you to look more into your employee high deductible plan, because I know for me, when I signed up for it, they automatically put $1,000 into my HSA account for me. So that kind of took the sting of a $2,500 deductible away from a little bit when I was like, okay, well, it's already almost halfway, filled. So a lot of companies are trying to push these plans because they can save a lot of money on both ends. So just, do some research. And, for me too, they also match 50 cents on the dollar that I contribute every year. So there's some great plans out there that you can actually get quite, really kind of get ahead in life just by looking into it a little bit more.
Right, and I think on the business side of things too, if you're a provider that is, one of those in-network providers for a low deductible plan, you're paying somebody to be in that program. So it's costing you. So somebody's getting paid on the back end there. They're making that money up somehow by charging extra patients or charging for extra things they wouldn't, or charging the insurance companies more. Like somewhere that fee is getting transacted there. So you're either getting less quality or somebody's getting ripped off along the way. And then you're going to end up paying for it regardless, because the insurance company is not going to just cover it for free, right? They're just going to pass on that cost somewhere to an employer who's going to pass it on to whatever, right? It's a dangerous slippery slope from the business side of things too. So, I mean, having the ability to shop around with that HSA is more power in your pocket, because you can go to these people that are good and aren't willing to just bend to the insurance companies to say, I'm going to lower my standards, or I'm going to just pay this extra fee to be a part of this network, to drive these clients to me. I want the right people to come to my practice.
Mm-hmm.
And I want to be a part of their practice because they're doing the right things and they're making the right choices.
All right. Well, I think we're getting into a gray area that's definitely not our, subject matter of expertise. So with that, I think we should just kind of, maybe end this medical and just kind of reinforce the idea of, if you're, no matter what your health plan is, if you haven't looked at it since you started working somewhere and it's been a few years, just maybe try to go in and reevaluate. Just make sure you're still happy with your choice. Other than that, we're just going to wrap up this one. But next week, we're going to talk about at least Brett's very favorite topic. It's going to be food budgeting.
Oh, delicious.
All right. So feel free to subscribe to our podcast. Check us out on our website. And as always, if you have any questions, please feel free to email me. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.